Welcome everyone to the Kendall Report. It is Sunday night and fair amount to talk about, I guess. We saw a lot of risk come into the markets on Friday. The three-day trade was over before it even had a chance to start. We opened below the low of the session, so much for that trade, but it's still a good one when you get set up. So unfortunately, we didn't get a good setup this time. There's just a lot of volatility, and I think it's interesting, just real quick before we get into the meat of tonight, that we're seeing just market sentiment switch so quickly. We were everybody was telling me everybody was bullish, and now everybody's bearish again. And the end of the world's coming, and the Fed's going to raise rates to 20% like they did in 1980. No, I'm just joking. None of that's happening, right? So I continue to see these all types of reports out there that are suggesting. I saw a chart of mortgage applications down lower than they've been for 28 years and all that stuff. Like I said, I have an old cliche, but you can't get hurt jumping out the basement window. A lot of these numbers are just in the basement. They're probably not going to get any worse. Doesn't mean they're going to get better, but this is what the low looks like. I was talking to a friend earlier today, and indeed it was, we're looking at all of these metrics being at super low. Not all, it's a mixed bag, right? But when you get to this type of level, you just have to be looking for a low. In the video tonight, I said, we'll march, we'll market rebound in March, and I think it will. And we'll wait till we've got 2 more sessions to go through. So on Wednesday night, I'll go through some of the monthly setups and things of that sort, like we usually do on the beginning of the month. But I just don't see, there is some potential downside risk. I think it's incremental from these levels. I don't think we're going to roll off a cliff and all that. We were down 1% on Friday, but it seems like, I think just seeing the 39 handle again just starts to scare people, and that we're going down to a new low. I just don't see that pattern. Let's talk about what's coming out this week, and then I'll get into a couple other concepts and ideas that I was looking at over the weekend. But as we come into Monday, we got durable goods coming out, expected to be down minus 4.2%. Pending home sales is expected to be flat. I've talked about this before. I expect that home sales are bottoming out. I think all of this real estate stuff is mostly bottoming out. You see a ton of videos out there still. They started last year how there's a collapse in real estate going to happen. And that's probably not that. Most of these things that are being predicted out there are not likely to happen. They're pretty good clickbait, and they get a lot of views on their videos, but they don't really do much. Like putting out a video that says March rebound, no one wants to hear that. If I said March collapse, I would have twice as many views as if I say March rebound. And I do believe those headlines that I put out there are some relevance to what my general beliefs are. And I'm just not seeing this stuff go on. But just going on, Tuesday is the final day of Feb. We've got consumer confidence coming out, expect to be 108. That's actually a pretty good number. Wednesday, we got manufacturing PMI, expect to be 48. That's a little bit in the contraction mode. Thursday, the typical claims and continuing claims, 197K. Seeing these numbers coming in better again. Fewer new claims, and the continuing claims came down quite a bit. I think roughly 35,000. ISM non-manufacturing comes out on Friday. That's up 55.5. So that number is a good number. Consumer sentiment at 60.67. And so that's another positive number overall. Just want to, before I go much further, I'll tie all this together in a minute. Last week we saw GDP come in and get downgraded down to 2.7 from 2.9. All of the inflation numbers were up. The deflator was up to 3.9, PCI up to 4.7, and then the previous month was actually up by 0.1 as well. So everybody was selling based on that. I mean, if that's what they mustered up is what you're seeing now, we're up 10 handles right now. When I first came in, we were basically flat tonight. We're starting to see some things come out. I saw the PBOC came in adding money. And, one of the things that this is some other metrics I think it was on LinkedIn, somebody had posted, somebody from a major firm talking about how the cost, the Baltic index is way down. And one of the things, the shipping container costs from China to here, well, if you think about it, we got squeezed. They shot up when all the supply chain was messed up. China shut down, so nothing was shipping. So now it's starting to stabilize. And it's actually, if you take out the spike, I wish I had this chart there. If you take out the spike, we're basically, if you drew it, it looks like where we would be if nothing ever happened. So it's not that things are stabilizing; they're just back to where they were right now. So they have stabilized at the previous 19 levels. So a lot of metrics that we're seeing were just, if you took away the whole last 3 years, this aberration that was created by shutting down the economy and closing and locking us all in our homes. If you take that out of the picture, everything is just kind of returning back to that point. Now, well, you have to get going forward to make things better. But like I said, to me, everything looks like it's stabilizing. You'll see here in a minute, I go through the database. Database continues to be very bullish. I'm going to go with that every time, folks. I never fade that. It's sort of like the line in Top Gun, I'm not leaving my wingman. You never leave your wingman. And I'm not leaving. The database is still, on the short term, it's corrected quite a bit. But on the intermediate term, it's very stable where it's at. The next several weeks will be really key. But I think as we come into March, we're going to see the market starting to claw back a bit. And it just makes sense. I mean, like I said, market sentiment went from what appeared to be really bullish to really negative in a couple of weeks' time. And I'm not sure a lot of these measurements really mean anything, but they certainly seem to swing pretty quick. I'm going to fade these some of these retail. The AAII is down quite a bit, but I saw a survey just on Twitter a little bit ago, and I commented on it. And I just see these things as being ridiculous, lower 12% bullish. You got to take the other side of that trade almost every time. All right, a couple things as we go through this week. I don't see any big changes. And I mentioned in Friday's video that all of a sudden, all these numbers are behind us. The PCI, the Fed, everything. If you look in the rearview mirror right now, all you see is this stuff, and we're pulling away, and we're going further down the trail. And it's going to be another multiple weeks before we get into some of these numbers again. So we've got this little reprieve that's coming in. And as those items fade in the rearview mirror, there's going to be some other inflection points that come out in the markets in the weeks ahead. So let's go ahead. I think we can go and probably get through tonight's video. I am going to cover the Dow because I think it's of interest at this time. So I'll do the Dow tonight as well as the normal markets that I do. But let's go ahead and take a look at the Wavetech database. Real quick, I'm going to switch this over to the weekly database real quick. I want to start there. And as we look at the weekly, we're still at 68.79% bullish. We had 570 buy signals, 632 sells, slight little negative rotation, nothing material. And you can see on this weekly long 1.2, it was slightly bullish, where the other one was negative just slightly. And most of the selling came in this the weekly 3.2 model. But we're still at 68.79%, and this is just flat out bullish. The key here will be for us to stay above 62%. We're not going to get another number until next Friday, folks. So next Sunday night is the next time I'll be talking about any changes in that intermediate database. And we'll watch pretty closely what's going on in the daily. Let me flip over there, and so we can see what that looks like. So the daily is at 35.99. I mentioned this 28% number. It's actually a 32 to 28%. We should hold in that range. If we drop under 28%, then there could be some more material declines. We'll see how this acts over the next couple of days and see if we start to see some stabilization. But there was 121 buys, 896 sells. So further attrition. You may remember was just a few weeks ago that we were up over 80%. And I told you we started a rotation, thought we'd hold around 58.62. We continued to dump. There's been quite a bit of downward pressure on the short end of the market, the short-term trend. So this is reflected here in the database. But overall, I have talked about this in the past. Really what happens here is the short-term database rotates negative. Meanwhile, if we go back and look at what's happened going back to October, we had the October lows come in, and we saw the database go through basically a double cycle on the short-term database where we got up into 70%, we correct a little bit, then we went to 80, now we're into 35. During that time, all of the patterns in the markets were starting to bottom and gradually starting to get those, higher highs and higher lows patterns setting up and consolidation patterns. And that's what our models are picking up, is seeing all of these consolidation patterns. And it's forward looking with expectations of the markets actually moving forward and seeing some appreciation. I know it's probably getting old if you watch this channel all the time, but basically what happens here is that the database is forward looking. So on the intermediate, it's looking forward at least 180 to 220 days. So we go back, we got our first traction on the database from really low percentages into single digits coming out of the summer lows and into the October lows. We got in November, December, we saw 22, 30%. Now here we are at 68.79% bullish. So we've evolved quite a bit. That means 7 out of 10 stocks are indicating that there's at least a 60+% probability of appreciation. So that represents about 10,000 symbols in our database. So it's quite a few symbols. It's not just like I said before, a trend line on a some index chart that's weighted by 60 or 100 stocks. It's actually material 10,000 stocks that are indicating there's some appreciation. So once you get behind the background of these indexes and start to look deeper, you see a lot different world. Let's go ahead and get into the technicals. Yeah, so looking at, we'll start with the hourly chart as usual. I wish we had come up a couple hours ago because the hourly chart was indicating we'd see some strength. We're up 10 handles. As I mentioned, right now we're at 39.85. There's projections. There's a fib target 1 up here right at 4,001.75. And then there's some higher targets above that up here at 40.23. And that's about where we've been. If you look at this chart, this hourly chart, this goes back a couple days. That's right where we've been stalling. Right in that 24 to 34 level has been a place where the market has stalled. And the algos are suggesting we're going to stay strong. Looks like around as we come into the London Open tonight, looks like there's some potential for us to be testing that 40 period moving average on an hourly basis, which is 39.97. If we get above that, then we could see these numbers play in overnight. And as I've talked about many times, as we come into the U.S. Open, the market's trading higher in a pretty decent number. It's almost, there's a fade trade right off of the open on the other side. So if it's trading higher, you can scalp off this side. Sometimes we get off the short side. Sometimes we get this complete reversal and it's all down from there. It's too early to tell the algos. If you have the indicators, you'll be able to see what the algos are setting up. And if that's the case, if you look like we're coming in and the algos are trying to turn down around the open, then there's probably a play off of that if you're day trading. As far, I'll go through the daily charts now just so we can see the intermediate or the daily short-term range expectation here. And this is right here. It is suggesting that we're trying to stabilize here, but we still have, as I mentioned in passing comments a minute ago, we do have some downward potential here. The support right now, 39.44, 39.09. If we take that out, then 38.73 is still a possibility. And the patterns that are unfolding here are interesting. We do have, it's hard to see in this range here, but buried in here, I'll expand it just a little bit. But there's two downward targets. They're still valid, 39.82 and 39.47, which lines up pretty close to that 39.44 min number. And there, you'll see here, I'm going to go through the weekly chart next, but there's definitely some downside there. Let's chop over to the daily chart real quick here, and just take a look at the market grid expectation. Right now, we've printed 73 low. S1 is 61, R1 89, R2 4005. That's about to those numbers I was talking. 4001 is the minimum. If you look R2, that's R2. R3 is the 21 level. That would be that Fibonacci target on the hourly chart. So I think we stay a bit under pressure here, and I'll go back over to the trading view here just so you can see the algos are staying fairly weak. The 10-period moving average is still down. We're trading below the 40. We're somewhat in no man's land, and there's some potential of us. You'll see here. Let's go ahead and take a look at the weekly chart here. This is the weekly. A weekly has some new Fibonacci targets to the downside. I talked about this number last week, and it's becoming 38.42 is STX, but it's also, if you look at the averages here, let me bring this up over here. 38.05 is the weekly 200-week moving average. 38.42 is STX. So there is some potential for it to get down there. The only thing going for it right now is that the algos are stable. We have a plus 0.56 on PPM1. So there's going to be somewhat of, I'll call it almost like a magnet for us to get back around 4,000, 4,015. That appears to be where the market wants to stabilize. We also have support here right now at the 39.53, and I've been talking about that number for absolute days now, this 39.50, and we keep getting down into that range and we bounce out. We didn't get as big as bounce on Friday. We got a decent bounce, and if you're watching the trade on Friday, let me go back to the daily here for a second. If we go back on the dailies on Friday, the 35.55 was the STX number. We went to 39.47. So we went right to that number, right to the 50, another bounce, not a huge bounce, but we could easily in the next couple hours be back at 4,000. Market just keeps wanting to get back above 4,000 for whatever reason. There's not any follow through on the downside. So the key numbers are going to be to watch the numbers I just told you about. Let's go ahead and take a look at the NASDAQ. All right, so NASDAQ, this is weekly. We do have some support coming in right here at the 40-period moving average, 11,925. The low so far, 11,990, so we're right into that range. The interesting thing is here is we do not have a lot of, extreme bias to the downside here. We're seeing it flatten off on PPM1. It's still negative, but the 10-period moving average is up at 12,300. We'll call it 310. I'm rounding off a little bit. And we've come down into that 200-week moving average as well. And that's sitting here 11,770. We've been down 11,990. What did we hit? We hit 11,923 last week. So far, we're kind of hanging in that range. But I would watch those two levels as a pivot right now, the 40-period moving average, a simple 200-week on that. This is daily. I said it was weekly. This is the daily that we're looking at. So this is the daily looks just like the S&P, where it's stabilizing, and we're starting to see a little more weakness on this on the PPM2, and that is tracking up here at this where the 21-period moving average is. It's down slightly, and I think what probably the best that you could hope for here this week would be to trade between the 40-week, 200, let's say 200-day, 40-week, 40-day, and then the 10-period moving average on the upside at the, let me get that exact number for you, at 12,320. So, look at that 11,850 number. Just get this, 11,900, we'll call it round, up to around 12,300, 320. We'd probably stay in that range this week. I think we're pretty close to the bottom end of this range. With this upward slope, if we look at the PPM3, we're in trend mode, so there should be decent, there's only about a 40% probability for it to decline below that 40-period moving average, 11,925. So we should see it stabilizing here. Now let's go to the weekly. And the weekly chart is still kind of got an upward bias here. The 10-period moving average is right now at the 11,904. That's going to be pretty good support right now. The PPM1 is up at 0.81. There's only about a 10% probability to trade below that level. So look at that as major support. It's interesting because the weeklies, all the moving averages are basically congregated in the same very tight area. And typically with this upward slope we have, this is probably bullish, but we're not going to see any turn up in the market grid this week. We're really just looking at the potential for us to get up to, actually R2, R3 would be 12,750, 12,945. So that's where this stuff is coming into at this point. I don't see these downside numbers getting hit, but they're certainly out there. Like I said, in the S&P futures, we're seeing the same type of bias. There is some bias and potential downside, but it appears to be limited at this time. All right, so we'll take a look at the Russell weekly. Russell is sitting right on its support as well. We're looking at 1892 last trade right now, 1896, low 89. We're right on, this is the weekly chart, right on those moving averages. We're probably going to stay within the market grid this week. And I kind of like the bias on the on the indicators right now. We're at 0.65 bullish on PPM1, and that's right there. That value is 1892, so that should be your support. Extreme support in this pattern would be 1850 would be the extreme support, but we should hold right in here, start to move up at least into some of these other numbers. R2 is 1928, R3 1947. I suspect that we'll see some inching back in all of these indexes as we come through the week. Next, we'll take a look at the yields here. The 10-year this is a weekly, is continuing to climb up. I think we're starting to hit somewhat of a ceiling in here at the, right now we're looking at 394. We're right around, getting up back around 4%. I think they've kind of went a little too far. We should see it coming back in just a little bit, heading back towards the 297 area. I'm sorry, that's the wrong number. I'll get the right number here in a sec. Towards a 375 number over the next couple of days. That should be a pretty good support back in here. We should start to see rates start to come down just a little bit, so it'd be a little bullish on the prices for coming for a little bit of a rally here, but not anything substantial. I think they just end up stabilizing. I would argue that we're in the same kind of pattern we've been on a lot of stuff, where we're getting, the last time we got up to this level, we got up to 90 and a half. This time we printed 97, we'll call it 98. So we're a little bit higher. I think we should come back in. Algos look like they're staying pretty solid, but all that tells us is that we're going to stay above those averages right now, which are right now at 367, and let me just see what they're going up on a daily basis. Yeah, they're going up. It'll be about 371 this week. 374 will be the bottom end of that range, and those will be very strong support at that level. I don't see rates dropping below those levels, but we should start to back up just a little bit. Let's flip over to the dailies and see if we get confirmation there. One sec. Yeah, so we traded up at the top end of the range. PPM1 is up at 0.69. It right now is at 3.84, so we should come back and test that. I think ultimately we come through here. There's a big time pivot number laying out here at 365. I don't see that's going to be major support, which is right around the 21-day moving average. Next, we'll take a look at the dollar. The dollar continues to rally up. We did hit fib target 1. Remember looking at this a couple weeks ago, and we had these fib targets coming in here right up toward the 200-day moving average. Algos are getting a little tired here, and PPMs are still positive, but they're not in a trend mode right now. So this tells us that we could see a bit of a rollover. Look for a move back towards the, let me get an exact number for you, around the 104.25, 104.50, just moving back in. And then depending on how they trade around there, we could see some further declines. I think we stay, like I said, the fib target 1 here is 105.73. So far we printed, let me just get up to the numbers here. We printed up 105.32 and then 105.26. So this week so far, so we're just looking at, I think we stall right here at this fib 107.73 is probably the extreme. We should see a bit of a flattening out. And I think this little flattening out will probably be not super bullish, but I think it'll be supportive for the equity markets. Okay, so let's take a look here at the crude oil. I've been talking about crude starting to firm up a little bit. It continues to look like it's going to stay positive. I'm going to draw something in here just to make a point, and nothing more than just drawing in what I think what we've really been seeing for a while, and this is it. We've been in this box for a while, and I think we'll probably start moving up. You can see that in this pattern here, there's some fib targets right here. And we have the 200-day, 200-day moving average moving down. I think everything's going to just move up toward this box. You see the algos down here in a couple of days are suggesting we're going to get back over the averages. Everything's trying to turn up here. And so that, with the exception of the 200, which is still down, which is that angle of attack here on this average. So we're going to start, we're going to stay in this box. I don't think we get out of this box. And we should probably see some resistance midpoint in here, but there's just nothing, there's really nothing there from the standpoint of any really big trend. There's nothing, we're not going to see all-time highs, and we're not most likely going to see these downward targets that I've talked about as well. And that, let me just bring those up. I'll mention it again. The downward target 70-40 would be an extreme, but that put us down just below that range inside of that box I just talked about. But I think the box is where we're stuck. There's really nothing here. It's probably very tradable, this pattern, but nothing big that's going to cause any shock waves through the markets. This isn't going to be one of the things that's going to be discussed as we go through the markets. It's not going to be crude oil making new highs and doing that stuff. Now, having said that, now there'll be something go on, but the reality is it, based on the technicals, it should stay within these ranges. Next, we'll cover gold. Gold continues to have just this drifting pattern. The algos are suggesting that we're going to try to stabilize in here. The key will be in the next couple of days, if we can get above the 10-period moving average. That number right now is 1842. We're trading right now at 1819, so we're ways away. The 200-period moving average is down here at 1775. I don't think we get there, but it looks like we're drifting down. We just can't find any traction at all, but it does look like stability if we can hold a range for a couple of days, but we got to get over that 42 level to make any headway in any type of rally. And there is a major pivot point way up here at the, looks like around 1885. That's not even in the conversation at the moment. Let's take a quick look at the weekly just to get that perspective. Weekly is interesting. We've got some new downward targets coming out of tonight's action. And so the weekly is demonstrating we could go down to the 200 week of 1772. That would be the extreme. We do have a 21-period moving average with a PPM at 0.29 in trend mode. And that's setting right there at the, let me get the exact number for you. That's setting right now at 1782. So that between 1782, the 40 is, I'm sorry, 1802 to 1782 is your support range. And then you've got the extreme down here at 1774. So it looks like there's a shot here. If we look at the weekly market grid as well, you'll see that we've got a shot here. Right now, the 21 lines up pretty good at S2, 1794, S3, 1783. On the upside, you can see R2. This is a weekly range, so R2 is at 39, R1 is 1827. So everything looks like we stay in that range I suggested, and it's probably even clearer here, the 21 and 40, which is right now on those ranges. The 2140 is 1802 to the 1782 is the range. So we could, let me get this numbers right, make sure I got it right. Yeah, 1802 to the 10, which is 1870. I don't see that happening, but that would be your range, trading between the 10 and the 21. But last market we'll cover is Bitcoin. Bitcoin did see some of that downward pressure I was talking about. This is the weekly. Looks like we still have some downward move. Look for a move towards the 21.7 level. We should hold in that range. But if you look at PPM1, it's even though it's breaking its first derivative, it's still positive. So this will be the simplest trade I can give you is the 10-period moving average. Simple 10 is going to be your best support. You see that, you should get a bounce out of there. And ultimately, I think we trade in the market grid range. And this, unfortunately, this market grid doesn't update until tomorrow night. So if you have the indicators, you have TradingView, then you can see exactly what the range is after midnight tonight. I believe midnight Eastern time, this chart will update. Let's take a quick look at the daily graph just to get a little shorter term view. You can see we're coming right into some of the support levels that I know I mentioned the other day just coming in here. We're looking at the, let me get the numbers up here. The 23,312, the 40, 23,150. That should be your support zone. We do have a downward projection here. I don't think it'll get hit, but we're looking at fib target 1, 22,368. But my expectations will probably stay over the next, say, 24 hours. We'll probably stay within this market grid range, and just make notes of that. I'll just, the extreme ranges are 22,790, 24,333. We're probably looking R2, S2. R2 is 23,947. S2 is 23,176, which brings us right into those moving averages. Okay, folks, that was fun. We got through that pretty good. Just looking at some of your comments and just taking a look and see what's out there. Thanks, Spank Math. Appreciate all your help. Yeah, so I think in summary, folks, I think this week, I really believe if we can't knock it down today, which I don't, and get through this 50 number, this 3950, then we're going to hold and we're going to be back into the 40 handle. I don't see any grandiose moves this week. I think it's more consolidation. I think the markets are in a very confused state, and I think we're just going to continue to consolidate, probably 3950, 4050, maybe upper end 4080, then back and around. And I don't think there's anything here. I think we're probably going to have one of the more boring markets that we've had for a while, meaning that this volatility will probably come back in. There's really no news this week. There's nothing really to drive the markets either way. So I think that's how we will set up. So anyway, yeah, so those of you in the live room, see you tomorrow in the live room. And we do have some announcements for the community coming up towards the end of the week, so I'll be telling you about the future of the channel and things that I'm going to be doing and offering out to the community. So anyway, thanks a lot. I'm hoping, by the way, I'm going to put this out at the very last. So if you made it this far, I was working on earlier the part 2 of the PPM article that I'm writing. It's a little more complex. I'm hoping that I can at least get it done tonight, hopefully get it shipped out on Substack. So you can sign up for free if you want to support the channel. I think it's $8 a month or something like that if you want to do that. But you can get it for free. You can sign up for free, but it's kindlereport.substack.com. And hopefully I'll have that out tonight. And if you do sign up, you'll get notification email-wise when that comes out. So anyway, Thanks again for all your support. Really appreciate it. We'll see you tomorrow night, same time, same station. See you then.